a very warm welcome to you on this wonderful Thursday afternoon. The market seems to be getting back in shape. We have the weekly expiry of the Sensex, but it's the Nifty which is now consolidating above a very crucial 26,000 level after 3 days of sustained selling pressure. We've seen a high of 26,320 on the index on Monday, and a most recent low of 25,850 couple of hours ago yesterday. So that's a decent 150 plus 350, almost 500 point profit booking that has seen taken place. But for the moment, it seems that 26,000 and above is where the Nifty will try and end the day. The markets are pretty decent. Today's rally is funded entirely by the IT space. The IT index 1.4% higher, 38,362 for you. A very strong show. If you look at the pullers and draggers on the Nifty, it's IT and IT all the way. Infosys contributing 14 points, TCS contributing 10 points, Bharti Airtel, quasi IT, full telecom 12 points, Reliance in the green, Axis Bank in the green, and ITC also adding to its flavor. Mild profit booking on HDFC Bank and ICICI Bank. Let's hope the last 10-15 minutes of trade are in favor of bulls on Dalal Street. Joining us on the show is Mr. Sudeep Bandhopadhyay, the top man at Intraday Capital. Namaste Sudeep ji, and a very warm welcome to you, sir. 3 days of pain. Is the market getting ready to welcome President Vladimir Putin with a shade of green?
Well, looks like that. I think beyond all this, I think Shelji market was definitely looking oversold. FIIs had been selling for the last 3 days like there is no tomorrow. I think there has been some respite in that selling, and that is leading to some amount of recovery in the market. Remember, irrespective of whatever happens as far as India-Russia relationships are concerned, and I'm very confident about that relationship. I think from the market point of view, India-US trade deal is extremely crucial. The global investors, particularly the US and European investors, are waiting to see what kind of trade deal and when the trade deal happens. As and when the trade deal happens, I think we'll see a lot of money moving into India from global investors. So we'll have to wait for that. I think the next level the market will reach only when the trade deal does get signed.
Okay, fair point. That's a fairly practical way of looking at it. Remember, Friday saw India reporting a quarterly GDP of 8.2%, the highest in 6 quarters, and of course beating every single economic estimate on the street. That prompted Nifty to open at a record high, 26,320, and it also prompted a lot of profit booking activity coming in over the past 3 days or so. Sudeep ji, how are you reading the GDP data? Who do you think are the winners when you look at the way autos are moving, the way IT is moving?
Well, I think the GDP data was definitely pretty impressive. There are some statistical factors which led to a bit of data being a bit better than what probably the ground reality actually is. But leave that aside. Undoubtedly, the numbers were pretty good, and it kind of reflects the momentum which Indian economy has gathered. Look, inflation is at all-time low. Interest rates are coming down. Investors or households are definitely financializing their savings, which does help the market. Government is spending 11 lakh crore this fiscal on capital expenditure, which is fantastic, and that is kind of helping the overall economy chug along. The rationalization in GST, the relief given to common man in income tax, I think all this is coming together in this Q3 and Q4, which is basically the festive season and the winter marriage season and things like that, where consumption demand genuinely picks up. So I think overall we are expecting even better GDP numbers leave aside the statistical anomalies and statistical reasons, fundamentally we'll probably see better numbers for Q3 and Q4 as well. Same as far as the corporate performance is concerned. Q3, Q4 performance is expected to be even better. Of course, you have to remember that Q2 performance also was much better than what was expected by most analysts in the street. Now, having said that, which sectors are benefiting, which sectors will benefit, which you asked me, to my mind, automobile is definitely a beneficiary of this GST rationalization and demand pickup at the lower end. Maruti's numbers very clearly shows that after a very long time, the November small car sales was very good. And this is happening after a very, very long time. So it very clearly indicates that GST rationalization as well as demand pickup at the lower end is helping manufacturers like Maruti. Also, one more segment which definitely will benefit, and the benefit will probably get accentuated because of the festive and marriage season, is the consumer durables. I think GST rationalization as well as income tax relief will help in creating incremental demand for consumer durables, and that will get reflected in their numbers in the coming quarters.
Fine. Okay. Fair point. A part of, let me, please allow me to mark a bit of the market for the moment. So 26,037 for you, 50 points higher. The story is not this. The story is that today 26,000 has been repeatedly tested by the Nifty. And what's a little more interesting is that on the daily charts, the 21 EMA has held after 3 days of consistent selling pressure. Beyond that, we've seen an intraday high of about 26,097 and a low of about 25,942. So a 150-point trading range on the index, and let's look at where it closes for the moment. IT and IT all the way. TCS, Infosys, HCL Tech, Tech Mahindra and Wipro have done a yeoman's job on the Nifty. In itself, the IT index is up 547 points. That's a very, very strong 1.5% uptick. Now, that's mainly on because of how the rupee has moved. Yesterday, we hit a record low of 90.29. Today morning, 90.40. But from then on, there has been a 50 paisa correction on the rupee, which, by the way, has helped the Nifty. Sudeep ji, how do you see the rupee at this point of time? Is it something to be worried about for the broader economy? Beyond 90, the life starts.
Well, I would say that certain segments of the economy does benefit, and that's getting reflected in the market. You're talking about IT companies. Obviously, every rupee depreciation, every rupee of currency depreciation adds significantly to the bottom line of the exporters. So IT companies definitely benefit. Automobile companies which are exporting in a big way does benefit, which includes the small car manufacturers as well as two-wheeler manufacturers. So they benefit in a big way. Multiple other sectors which are export dependent do get a lift as far as rupee depreciation is concerned. Probably rupee is getting reset at a new level, and that's what we are seeing happening. Normally, RBI doesn't like wild swings in the rupee, and they prefer gradual depreciation of rupee. This time, it has been very, very sharp, and after this sharp depreciation, we expect the rupee to stabilize and move in a range. So the new range, as you rightly said, probably is 90 plus. 90 point something it's going to be, and probably closer to 90.5. As far as the interest rates are concerned, this definitely has an impact on local interest rates, and RBI will definitely keep this in mind while adjusting interest rate, if any.
Okay, fair point. So that's the strategy as far as the rupee is concerned. The direct beneficiary of this dip in the rupee has been IT stocks, because a large part of their revenue, in fact 75-80% of their revenue is dollar denominated. A weak rupee therefore is a plus point for IT stocks. Let me also take this opportunity to mark record highs, if any, in the market today, which has been in a slightly flat manner. 1244 stocks are in the green, 1454 stocks are in the red. So primarily the bond market is on a back foot, but gains all around in the Nifty, as also the IT index. Three stocks hit record highs. Hero Motors 2% higher, 6340 for you. Vedant, the intraday high, the all-time high was 543 rupees today, and this is PTCIL at 18,888. It hit a fresh record high in trade today. At this point of time, Sudeepji, what is a good zone, a good sector, or a good stock where fresh money can be deployed?
Well, I think if you are talking about sectors, I will probably go back to cement. As a sector, we are extremely positive on cement. I think good things are happening. I talked about capital expenditure being done by the government, which involves infrastructure, construction, and that all requires cement. Domestic real estate business also is booming. So cement is one space where I think the demand push itself is propelling the companies upwards. Of course, they have achieved significant cost efficiencies as well. So cement is one sector I will definitely be positive. The other segment where selectively buying can be still made is consumer durables, and there are a lot of opportunities still sitting in consumer durables. We talked about the benefit consumer durables are going to get over the next few months, and I think that's one sector one needs to look at. The last but not the least I would mention is chemicals and specialty chemicals. I think this is one sector which was completely bombed out. The performance was terrible over the last couple of years, and the stocks were beaten down mercilessly by the market. But things are turning around there. Performance is improving, the demand is improving, and we believe that the original logic of China Plus One still stands, and the order book of these companies is growing. So I am positive on chemicals, specialty chemical, agrochemicals, this entire space. So for an aggressive investor, this may be the time to get into some of these stocks, good quality stocks, and start building positions.
Fair point. And it's a sector that's been ignored by successive investors for the last 3 years or so. So a lot of value to be had, and a lot of quality stocks available at this point of time. 322. So for the moment, it's most likely that the index will reclaim 26,000 on the Nifty. Let's hope that happens. And strong moves coming into from lower levels into Union Bank, into Bank of India. So these second-ranked PSU banks, low price ticket, high beta, fantastic valuations, and strong momentum. How are you seeing this space?
Oh, I love this space. I think, Shelji, there is a significant valuation benefit in the PSU banks. Let's look at the biggest and the largest bank in the country, State Bank of India. It trades at 1.1 time book. Now look at some of the private sector banks and even NBFCs. Bajaj Finance, good company, good business, quotes at between 5 and 7 time book. So the valuation gap should not be so much. There will be probably some valuation gap, but the gap is too much now, and it will be bridged one way or the other. Also look at the mid cap and small cap PSU banking stocks, and we do like quite a lot of them. The government is of course talking about further consolidation by merger of some of the smaller banks with larger banks and creating banking behemoths to compete effectively. I'm not sure when that will happen, what will be the valuation. So that even if you leave that aside, I think sheer valuation difference demands a relook at PSU banking back, and they have improved. Performances are improving. Overall, BFSI, we are positive, and in a falling interest rate scenario over a period of time, BFSI does benefit.
So SBI, Bajaj Finance is what you prefer. This is a very well discovered trade, the auto space, Sudeepji. Ever since 15th August announcement on a GST rejig came, Maruti in particular has appreciated to the tune of about 60%, and this is a large cap stock. Record highs are seen on Ashok Leyland. What talk about Eicher Motors, Hero Motors, TVS Motors, all of them have climbed very, very rapidly. Is this a space that still offers maybe decent double-digit returns, or is the rally now done and dusted?
Well, I think the rally is still more legs to go. One stock you didn't mention, Hero MotoCorp. I think you have to remember that Hero MotoCorp has, they operate at the lower end of the market, and that is one segment which was not doing well. But now with festive season kicking in, marriage season kicking in, and the GST rationalization plus tax relief benefit, finally percolating down, I think Hero MotoCorp, I expect, should start performing very well in the coming months and quarters. So one should look at Hero MotoCorp. We like M&M, and we've been liking it for the last 1.5 years. It has given fabulous returns to the investors, and we still believe that there is further leg to this stock, where all the businesses, SUV, tractors, and even EV, doing very well, exceedingly well, I would say. And there is still more scope for its growth. So both can be looked at, both these two stocks. I'm also positive on Maruti. It has moved up quite a bit, but I think the way the numbers are shaping up, the way things are moving, particularly in the lower end of the market where Maruti was suffering, I think things can improve even from here on.
Okay, fair point. That's a popular assumption across the market. Maruti and Hero Motors are two trades which have strong legs according to many participants in the market. 326, we are now minutes away from today's close. 26,024 for the Nifty, 38 points higher, 510 points on the IT index on the green, and the Nifty Bank flat as flat can be. Even if the index ends flat, which is most likely the case, what will be a moral victory for the bulls is that they retain 21 EMA on the daily chart and they close above 26,000. Let's hope so over the next 3 minutes or so. Strong pressure coming on the long side as far as IT is concerned, and one space that's done extremely well today is the defense space ahead of President Vladimir Putin's visit to India. Look at BDL. This is Bharat Dynamics that looks at the missile part of India's defense structure, and new transactions from S400, S500 most likely also to be discussed. Look at HAL, look at the three PSU shipbuilders, Cochin, Mazgaon and Garden Reach, and of course BEL and BEML. These 6 companies have been showing strong upticks in the market, which is more or less been flat. A view on defense counters, Sudeepji, what do you like?
Well, I do like defense stocks, but they have a fantastic runway. The only challenge is the valuation. So I am a little skeptical as far as the valuation is concerned. And if I have to really look at defense stocks, I would probably now at this stage look at private sector defense companies because there is still some room for growth based on other businesses. Let's say I will talk about a company called Bharat Forge. We are all aware. We talk about it in multiple other contexts, but it's got a fantastic defense business which they are building inside, and the order will start flowing in and start overflowing very soon. So maybe you should look at Bharat Forge if you really want to bet on defense. Its price hasn't moved up that much. The other defense company which I will talk about has been, in any case, my favorite is Larsen and Toubro. Again, I remember, Shalji, it's a very, very large defense business they have. They are one of the leading players in the defense segment. Again, valuation-wise, it's very, very interesting. And one can look at, of course, all of the other segments are also performing very well as far as L&T is concerned. The other smaller private sector defense players, again, the valuation has moved up quite a bit. And PSU defense stocks also, while they have a long runway, the valuation is not favorable at this stage.
with that, Sudeepji, thank you so much. I think your presence has helped the Nifty edge above 26,000. Let's see what the close is. Thank you so much for your time, and here's wishing you the best for the remaining part of December, and of course ahead in 2026. Thank you for your time, sir.
Thank you.
Ladies and gentlemen, 26,000 has been retained by the Nifty. That's a very big plus. Let's hope that tomorrow brings a fresh wave of buying into the index, and with that hope, we'll call it a day. Thank you for watching.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Abha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Hello and welcome to Business Today. I'm Siddharth Zarabi, and joining me today is Anand Goenka, Vice Chairman of the RPG Group, and someone who has just taken over as the President of the Federation of Indian Chambers of Commerce and Industry, one of India's oldest industry chambers. And Anand, thank you very much for joining us. Congratulations for this significant responsibility that comes at a time of considerable external turmoil, trade tensions, yet an economy that is surpassing expectations, growing at the rate that it most recently did. Your first thoughts on the state of India's economy?
Very strong point on the Indian economy. You look at the macros, if you look at what are the risks really that are ailing Indian economy, there's very little. Inflation rates are low, fiscal deficit is in control, overall everything going fairly positive. On top of that, growth rates are strong. The only change that we are seeing in the last few months is the intertwining of geopolitics and economics. And I think that is something where we have to tread carefully as business. Supply chain security, availability of critical minerals, and being agile with respect to key export markets is something which we as industry need to keep a close eye on and take forward.
Anand, for the benefit of our viewers, how would you describe the response of, India incorporated in a way to these tariffs? 50% is no laughing matter, yet you've seen the policy response when it comes to successive policy moves, whether it be GST, Labour Code, and we'll talk about that later on. But overall, what is the mood of India Inc. when it comes to this geopolitical disruption of sorts that has been imposed on us quite unfairly?
So in the first half of the year, I think it was a year of very high uncertainty. Every day we didn't know what was happening. We tried to forecast, change our forecasts. And then over time we realized it is just about being agile and living day by day and being very quick in terms of changing ourselves to the changing economic situation. If you look at the impact of US tariffs particularly, a few industries have got